Okay, so you want to own a funeral home. And on paper, it might be the closest thing to a guaranteed customer base in the entire economy. You don't have to convince anyone to want your product. Everyone eventually needs what you're selling, and nobody shops around for long. It sounds recession-proof, trend-proof, even Amazon-proof. Death doesn't care about the economy, and it doesn't care about inflation. So the logic seems airtight. Guaranteed demand plus almost no marketing risk should equal one of the safest businesses a person can own. The problem is that the demand being guaranteed doesn't mean the business is easy, and it definitely doesn't mean it's cheap. Because what you're actually buying when you buy a funeral home isn't a steady stream of customers. It's a heavily regulated, capital-intensive, emotionally volatile service business that happens to sell to people on the single worst day of their lives. So, let's start with the first question. What are you really buying? Most people picture a building with a chapel, a viewing room, and a hearse parked outside. That's the visible part. Underneath it is one of the most tightly regulated small businesses in the country. Every state requires a licensed funeral director, and in most states that license takes years of mortuary school, an apprenticeship, and a state board exam to earn. You can own the business without being licensed yourself, but you still need a licensed director running daily operations, and that person isn't cheap. Then there's the building itself, and this is where the first real shock hits new owners. A funeral home isn't a retail space you can convert from anything. It needs a preparation room built to health code standards, refrigerated storage, a chapel or viewing space large enough for a real crowd, parking for a funeral procession, and in most towns it needs to be zoned specifically for the use, which limits where you can even put one. Buying an existing funeral home with all of that already built typically runs somewhere between $500,000 and $2 million, depending on the market, and that's before you touch inventory. Now add the fleet. A hearse alone can run $100,000 or more once it's customized. Add a family limousine, a flower car, and a transport van, and you've got another few $100,000 sitting in a garage depreciating the moment you drive it off the lot. And unlike a delivery business, these vehicles can't be swapped out for something cheaper. Families notice. The vehicle is part of the dignity you're selling, and cutting corners there is one of the fastest ways to lose trust in a small community. So by the time you've licensed the operation, secured the real estate, and built the fleet, you can be already $2 to $3 million deep before your first service. And now we get to the part everyone assumes is where the real money is. How does a funeral home actually make money? The first stream is the basic services fee, which every funeral home in America is legally required to charge separately under the FTC's funeral rule. This covers staff time, coordinating with the family, filing paperwork, and securing permits. It typically runs somewhere between $2,000 and $3,000, and it's non-negotiable, meaning every single family pays it no matter how simple or elaborate the service is. The second stream is merchandise, and this is where the margins start to look interesting. Caskets are the obvious one. A casket that costs the funeral home $800 to $1,500 wholesale can retail for $3,000 to $10,000 or more, depending on the material and finish. Urns follow a similar pattern, often marked up 300 to 500%. Vaults, the concrete or metal liners many cemeteries require to prevent ground settling, carry healthy markups too. On paper, this looks a lot like the bottle service at a nightclub. A product that costs a few $100s sold for several thousand because the person buying it isn't comparison shopping. They're grieving, they're exhausted, and they want to make the right choice for someone they just lost. The third stream is the service itself. Embalming, use of the viewing room, staff for the day of the funeral, transportation, and use of the hearse. Each of these gets itemized separately, and together they can add several thousand more dollars to the bill. By the time a family walks out having arranged a traditional funeral, the average total in the United States lands somewhere between $7,000 and $12,000. The fourth stream, and this one surprised a lot of operators once cremation rates started climbing, is pre-need planning. This is where a funeral home sells a family a plan years or even decades before it's needed, locking in today's prices and collecting a deposit now. It sounds like pure insurance-style revenue, steady, predictable, low pressure, but it also means the business is sitting on a mountain of future obligations funded by money collected years earlier, and if those funds aren't managed carefully, a funeral home can end up owing far more in future services than it has set aside to deliver them. So, on the surface, you've got a business with several revenue streams, high markups on merchandise, and a customer base that literally cannot avoid needing your product eventually.
It sounds like the bar and the nightclub all over again. Sell something at a small fraction of its price and mark it up for the emotion attached to it. Except here, the margin story is more complicated because the biggest force working against this business isn't competition or seasonality. It's cremation. In the 1960s, cremation accounted for well under 5% of dispositions in America. Today, the national cremation rate has crossed 60%, and in some states it's above 80%. And cremation doesn't just change the type of service a funeral home sells, it collapses the entire revenue stack. A traditional funeral with embalming, a casket, a viewing, and a burial plot can generate $10,000 or more. A direct cremation with no service and no viewing can be arranged for $1,000 to $2,500. Same building.
Same overhead, same licensed staff standing by, a fraction of the revenue. This is the single biggest structural threat facing the industry, and it explains why so many independently owned funeral homes have been quietly bought up by large consolidators over the last 2 decades. Companies like Service Corporation International, the largest funeral operator in the country, own or manage thousands of locations, and they've built their model around exactly this problem. When cremation eats into the high-margin traditional funeral, scale lets you spread fixed costs like embalming equipment, vehicle fleets, and licensed staff across many more locations, and it lets you cross-sell cemetery plots, headstones, and pre-need contracts across a much bigger customer base. An independent operator running one location doesn't have that luxury. Every dollar of lost margin from a family choosing cremation over burial hits that single building directly. Now, let's talk about labor, because this is a business where you cannot simply cut staff during a slow month. A licensed funeral director has to be available essentially around the clock because death doesn't wait for business hours. Embalmers need specialized training, and in many states their own separate license. Add front of house staff, a receptionist who can field a grieving phone call with the right tone at 2 in the morning, drivers, groundskeepers if you also run a cemetery, and administrative staff to handle the mountain of paperwork every death requires. Death certificates, permits, insurance claims, veterans benefits paperwork, and you've got a payroll that has to stay fully staffed even in a month with far fewer deaths than usual. And that unevenness is its own problem. Death, unlike almost every other business in this series, doesn't arrive on a predictable schedule. A funeral home might handle 4 services one week and none the next. Winter months, particularly flu season, tend to run higher than summer, but there's no way to smooth that out the way a bar smooths its week with a Tuesday trivia night. You can't manufacture demand for funerals. You just have to be ready every single day for a volume you can't control with a fixed staff and a fixed building sitting there whether it's used or not. Then there's regulation, and this is where the business becomes genuinely unforgiving. The FTC's funeral rule requires funeral homes to provide an itemized price list to anyone who asks, in person or over the phone, before they've even signed anything. Every state has its own licensing board, its own continuing education requirements, its own rules about how remains must be handled, stored, and transported. Environmental regulations govern embalming chemicals. Cemetery regulations, if you're running one alongside the funeral home, add an entirely separate layer of trust fund and perpetual care requirements, because the cemetery has to promise to maintain itself essentially forever, which means state law often requires a portion of every plot sale to go into a fund that can never be touched for anything except long-term upkeep. And then there's the reputational risk, which in this industry is unlike almost anything else. A single mishandled case, a lost body, a mixed-up urn, an insensitive staff member can end a funeral home in a small community overnight, and unlike a bad restaurant review, there's no coming back from that kind of story. Trust here isn't a marketing advantage, it's the entire product. Families aren't choosing you because your prices are 10% lower. They're choosing you because their neighbor used you 20 years ago and nothing went wrong. So let's put some rough numbers on a mid-size independent funeral home. Say it handles 150 services a year, split between traditional funerals and cremations, averaging out to around $6,000 per service.
That's $900,000 in annual revenue. Industry data generally puts funeral home profit margins somewhere in the 15 to 20% range for well-run operations, which sounds healthy compared to a bar or a grocery store. But that margin assumes steady volume and disciplined cost control. Push the cremation mix higher, lose even 10 or 15 services a year to a larger competitor's aggressive pre-need marketing, and that margin can compress fast, because the fixed costs, the building, the fleet, the licensed staff, don't shrink just because fewer families walked through the door. more. This is the part that surprises people who assume a funeral home is basically guaranteed money because everyone dies eventually. Guaranteed demand for the category doesn't mean guaranteed demand for your specific building. Families increasingly compare prices online. Direct cremation companies that operate with almost no physical overhead have entered the market and undercut traditional funeral homes dramatically, some offering cremation for under $1,000 by skipping the chapel, the fleet, and the viewing room entirely. That's the same pressure the corner bar feels from someone drinking at home, except here the competitor isn't selling a worse version of your experience. They're selling a legitimately simpler product to a growing share of customers who want exactly that. So does owning a funeral home actually work as a business? In the optimistic scenario, yes, and it can work very well. You're in a stable community with strong multi-generational trust. You manage your pre-need trust responsibly. You keep your merchandise margins healthy without feeling predatory, and you diversify into cremation services rather than fighting the trend, maybe even owning the crematory yourself instead of outsourcing it to a competitor. In that world, you have one of the more durable small businesses in America, immune to recessions in a way almost nothing else is, because grief doesn't check the stock market before it happens. In the pessimistic scenario, you overpay for an aging building in a shrinking town. You're slow to adapt as cremation eats your average ticket size. A regional consolidator opens 2 towns over with a bigger pre-need sales team, and you're left holding a building with expensive fixed costs and a shrinking share of a customer base that was never growing to begin with. Rural funeral homes in particular have been closing at a steady pace for exactly this reason, caught between rising costs and a population that's both aging and shrinking. Here's the honest truth underneath the whole business. A funeral home isn't really selling caskets or transportation or a chapel for the afternoon. It's selling the appearance of control on the one day where a family has none. It's selling the sense that someone competent is handling the parts they can't bear to think about so they can focus on saying goodbye instead of filing paperwork. That's an extraordinarily valuable thing to provide, and families will pay real money for it. But it's also an incredibly heavy thing to carry as a business model, because you're not allowed to have an off day, you're not allowed to cut corners when times are tight, and you're competing against a version of your own industry that's stripping the experience down to its cheapest possible form and winning more customers every year. So if you ever do decide to own a funeral home, understand what you're actually buying. You're not buying guaranteed demand. You're buying the responsibility of being ready every single day for something no one can schedule in a building that costs the same whether you serve 2 families that month or 20. When it works, the trust compounds for decades and the business becomes almost unshakable. When it doesn't, the fixed costs stay exactly as heavy as they always were, and the families who once had no other option now have several.